Hey everyone, welcome back. So in this video, we're going to go over Rivian Q3 results. I'm an investor with them. I've been investing in them since they pretty much IPO'd. So I've been buying at a lot higher price than where it is now. But I've been dollar cost averaging into them for the past almost year, I guess now, or it's going to be close to a year. I own 294 shares of it right now at an average price of $4.13. So I'm pretty down as far as my dollar cost averages, which is good. So we're going to take a look at their numbers, kind of give you my thoughts of everything that's going on right now and see how they're improving basically. All right. So if you like this kind of type of content, hit the like button, subscribe, helps me out tremendously. And obviously this is not financial advice. This is for entertainment only. Do your own research. And as always, I'm invested in following coins and companies for full disclosure. So let's get into Rivian here really quick. This is from Rivian's website. They provided this to shareholders. Key highlights, 114,000 of R1 net pre-orders in the United States and Canada as of November 7th. So that's good. That has actually grown from the previous number. EDV, we know it's 100,000 for Amazon. They're working on those, getting those built and shipped out to Amazon. We have plus 15,000 vehicles produced since the start of production. They want to get to 25,000 by the end of the year. That leaves us with about 10,000 or so left to make in Q4. Quarter over quarter increase in production is 67%. Don't know how much that's going to be able to go forward. Quarter over quarter, that's a huge increase. It took Tesla, a couple years to get to 100,000 vehicles. This is going to take them possibly a while, but we'll take a look at the numbers. They still have about 14 billion of cash and cash equivalents and restricted cash as of September 30th. So that's good. They got plenty of money to last them a couple of years. They're still going to be building out the facility out in Georgia. That's going to cost them a couple of billion, but they do have the cash for it. And they're looking for 25,000 vehicles to be produced in 2022, and they reaffirmed that target as well. A couple of things that I wanted to point out here was basically just on, here it is. In the third quarter of 2022, we produced 7,363 vehicles and delivered 6,854 vehicles, which is great. The ramp in production is in line with our expectations despite the challenging supply chain environment. In July 2022, our increased production enabled us the opportunity to transition outbound freight from truck to rail, which provided additional outbound logistics cost savings. And then in the fourth quarter of 2022, we expect the in-transit time from rail shipments coupled with the increase in volumes from the ramp of our second shift towards the end of the quarter will cause a larger discrepancy between production and deliveries. So you're going to see a lot more cars being produced and a lot less, or a little bit less deliveries being made because of that. But there are going to be some huge cost savings for them using the rail system instead. Let's see here. They recently started production on our second manufacturing shift in Normal Factory, which is a key step for our R1 ramp up. So that's good. They've been running first shift only. Now they're getting into second shift as well, which is going to help them obviously build more cars. The ramp is very much like our first shift in that it will require time and training to optimize, and we saw that with Tesla as well. Tesla had production hell when they were going into making the Model 3 as well. So this is one of those things that's going to take time. The second shift is currently contributing overall volume, so that's great. Other than that, that is all I wanted to cover in here. Demand still remains strong, which is good. They have 114,000 on order as of November 7th, so just a couple days ago. So that's good. And let's take a look at the numbers that I have for them. I've been tracking them since the beginning, and I have this little nice spreadsheet here, and this is available to my Patreon members. Link is down below if you want to get it. But here's what we're looking at. Q3 right now, vehicle reservations is 114,000. They had 98,000 at the end of Q2 or right around there. Don't remember exactly when they posted that, but they had 98,000. That's an increase of 16.33% from the prior quarter, which is great. Vehicles delivered was 6,584. They had 4,467 in Q2. That's an increase of 47%. It's a little bit less than we had in Q2, but Q2 was a huge ramp up increase from 1,227 to 4,467. So there's a reason for that. Vehicles produced was 7,363. That was an increase of 67% from Q2, which had 4,401, and that was an increase of 72% from Q1. And then that Q1 had a 151% increase from when they started production of 1,015. Sorry. So they have been growing nicely as far as production is concerned. Now, can they maintain that growth in production? I don't know. Based on the numbers here, and I'm using the lowest number, which is 55.91%. If they grow quarter over quarter just by that, that would get them to approximately 70,000 vehicles made in Q4 of 2023. Don't know if that's going to happen. I doubt that's going to happen. That would get them to 162,000 vehicles for the year of 2023. Now, can they pull this off? Possibly. It took Tesla a couple years to get to that number for them to be producing 100,000 vehicles plus. So I don't expect this number. I think things are going to slow down a little bit here, especially once second shift comes online, unless they go from second to third shift. Well, then you might get that kind of ramp up a little bit here in the next year, but we just don't know that. Cost of revenue per vehicle produced is 197,000, and that has been coming down, so that's good. So we started out the year at 430,000 cost per vehicle, and that's including everything that was in their numbers, which includes wages, everything, all that's everything that's included. And that has been coming down. So Q1 was 233,000. Q2 was actually up a little bit, 242, but now we're down to 197. So we are seeing a decline in cost to manufacture the vehicles, and that should continue going forward. Revenue per vehicle is at, I'm estimating here is 81,000. That's just taken the number of vehicles delivered. It probably should have, well, delivered, yeah, that makes sense because the delivered vehicles actually made the money. So we're using that, and we're using that, and F49, which one is that? Let's see here. I think that is the revenues. Yep. So we're using the revenue, dividing that or multiplying that by 1 million, dividing that by the number of vehicles made to get to that number. Okay. Vehicle reservations, if we use this number, revenue per vehicle of 81,409, multiplying it times 114,000, you would get that they have on the books about 9.2 billion in reservations right now. And that has been growing as well from the beginning. So they had 4.8 at the end of December 31st. Q1 was 6.9, almost 7 billion. Then we had almost 8 billion in Q2. Now we got 9.2 billion in latest quarter. So that is looking good as well. Cash and cash equivalents has been coming down a little bit here. They peaked at 18 billion at December 31st. And that is going to be a given, seeing that they are still ramping up production, everything else. They're burning through cash right now until they get to that point where they can produce enough vehicles to sustain growth and cover their cost. So that has been coming down, which is good. We want to see that continuing on here. These numbers over here are just the differences from the prior period. So we're taking the prior quarter, and then subtracting it from the current quarter to get the difference on these. And that's a good thing that it's coming down here. You can see it here as well. And this is the way it should be, negative numbers instead of positive numbers. So I should really delete these over here. Accounts receivable is 106 million. Inventory 949. That has gone quite a bit up, but they're also ramping up production, so that makes sense that they're going to have more inventory. Other current assets is 97, so in line with what they had in the past quarters. Total current assets is 12.7, so that's come down, and that is mainly because of the cash and cash equivalents coming down here. Property plant still in line, up a little bit here from Q2. Operating lease is pretty close to where it was, to a little bit of an increase, but not much. Other non-current assets has come down a little, well, it's gone up actually. And it looks like it has been going up here each quarter. Total assets, 17.3 billion compared to 18.6, a little bit of a decrease. And that is in line with what they're spending on cash. Limited liability, don't really care about that. Accounts payable, let's see here. 828 million. Accrued liabilities, 1 trillion? That couldn't be 1 trillion. 1 billion. 1,000,000,026. Customer deposits of 0. I'm not sure where that's being added to now. I wonder if that's being added to the current portion of lease liabilities and other current liabilities. If that's getting added to that, for some reason they didn't include it in this current quarter. Non-current liabilities is, let me see what has increased here really. I mean, the thing that really has increased is only the accrued liabilities, excuse me, by 300 some million. And that is why total liabilities increased by about 383 million on this record here. Going down here to revenues, revenues increased nicely, 47% from Q2. We had a huge increase from Q2 to Q2 from Q1 of 283%, 47% increase here now as well, and that's good to see. And then we're also seeing cost of revenue come down. The increase that it's going at is only 36% from Q2 to Q3. We had 78% from Q1 to Q2, and so that's good that we're seeing it come down here. Gross profit has gone up a little bit to 917 million negative, and that is they're producing more, they're spending more, inventory, everything else is being associated with that, more overhead. That's going to be the case for a while until they get to mass production. Research and development has come down a little bit to 452 million from 543, and that has been coming down every quarter, which is good. Selling and general administration, 405 million, that's come down also. So that's good. Other expenses, we don't have anything like that. So loss from operations was 1.774, a little bit of an increase from Q2, which is okay. Interest income, don't really care about that. So there you have it. I mean, the numbers speak for themselves, really. The market obviously liked what they reported here in Q3. I think the main thing that the market really liked was them getting to 25,000 vehicles this year. I haven't heard any guidance from them as far as what they're planning on making next year, but I'm guessing it's going to be if they can make 10,000 just per quarter vehicles. That's basically what they need now to get to 25,000. We're looking at 30,000 vehicles, but I think they can increase output and production to maybe we get 35, maybe 40, somewhere around there. 40, 45,000 maybe even vehicles, depending on how fast they can build out. But yeah, that is it. Let me know if you guys are invested in them. What do you guys think of them? This is a long-term play for me. This is one of those things where you always hear people saying, had you only bought 1,000 shares of company X 10 years ago, you would be, or 20 years ago, you'd have $1 million based on that investment. So this is kind of my play on it. I do like the vehicles that they are making. I can't afford them, but I do like them. And I've learned over the years that things that I find appealing, whether it was Tesla, I couldn't afford to buy Tesla stock, 10 years ago, but I would have liked to have bought it. Other companies, Microsoft, Google, things that I use, things that I want to use, they end up doing typically pretty well. So Netflix is another one. I started using Netflix pretty much right off the bat, and I had the hindsight to invest in them at that time. I would have been in a different place. But let me know what you guys think. And that's it. Thank you so much for watching. Hope you guys have a great night.